So what's going on, you guys? How you doing? So this is Leonard coming at you once again from Legendary Legacy Group. We are talking about the 5 types of insurance. So this is the 5th one that we're going to talk about today. All right. So we went through term. We went through ROP, return of premium or refund of premium. We talked about whole life policies. We talked about index universal life policies. And the 5th type of insurance to me is one of the most important, and that is insurance on your retirement. So we're going to talk about something that I love to talk about, which is fixed index annuities. All right, so fixed index annuity. Annuity is a contract between you and the insurance company. All right, so it's in the life insurance family. It's just not an actual life insurance policy. Like I said, it is insurance on your retirement. So think about people that had a problem or lost money in the market when COVID happened. Okay, 2020. I say like right before that, 2019 in summertime. My wife and myself, we had rented a room at the. It was at a field house on, what was it, like 95th and Cottage, right over there, 93rd and Cottage over there, right? So we invited my mom, her school teacher friends to come out so we could talk to them about their retirement. I talked to a lot of these school teachers, and only a couple of them, including my mom, understood the information that I was saying and wanted to do something with it. So we were able to move their money because they were at the age where you could move your money without the company stopping you. So we're able to move their money into a fixed index annuity. Now, what happened a couple of months later in March of 2020? COVID happened, right? And within that week or two, when the world just didn't know what was happening, a lot of these school teachers lost about a third of their retirement accounts. So they were getting ready to retire. They were getting ready to go live on the beach and have fun and take trips and all this kind of stuff. But they couldn't do it because a third or so of their account was gone. So now what did they have to do? They had to stay at work and work a little longer, or go get a second job to try to make up for that lost retirement fund. And they called me to like, hey, Leonard, what can you do for me? I couldn't do anything because they didn't move their money before COVID happened. Just a couple of months ago, last year, 2025, when the president was talking about tariffs, you saw the market go up and down then, right? People that had their money in a fixed index annuity or something safe didn't lose any money during those times, those couple of days or weeks. Whenever you said tariff, the market was acting funny. The S&P, NASDAQ, it was just acting funny, up and down like a irregular heartbeat. That's what was happening. So you have to think about your retirement, okay? So fixed index annuity, like I said, it's insurance for your retirement. It's having insurance for your retirement to make sure that when you get into your retirement and while you're growing and saving to your retirement, you will have those funds in your retirement. What does it do? It has principal protection. What is principal protection? So say I have $300,000 I got from a granny that passed away, left me some money, or business venture or whatever, working all my life, and I have money put up. I've invested a little bit. Now I want to put it somewhere that I know is going to be safe. So I have $300,000. That's my principal. With a fixed index annuity, if something was, and that's one of my bullet points, if something was to happen in the stock market or, the 401k or anything, your fixed index annuity is not affected by that. Okay, your principal is protected. So my $300,000 is going to be protected. If I put in $300,000 when I'm ready to retirement, the worst I should have is the same $300,000. Okay, you have no losses, like I said, due to the market. You have no losses due to the market. Now, this can be different if somebody, agent or somebody in financial services puts you into a fixed index annuity that has fees. Okay, with fixed index annuity, zero is your hero, right? So even if the fixed index annuity doesn't make any gains, but it does nothing and it has zero, because some of these companies have fees, you can suffer some losses, 1 or 2%. So with the strategies that I have and my wife has, we attempt to always put people in fixed index annuities that don't have any fees, so that if the market doesn't do anything, if the strategy doesn't do anything, at least they're not losing anything. All right. You have guaranteed income for life. Guaranteed income for life. So with the fixed index annuity, you can turn on your income, right? When you're ready to retire, you can turn on your income. Say that I'm getting $50,000 a year, right? So I have 300,000. I'm getting 50,000 a year. 50,000, 100. So that's what, 6 years. 6 years, I get to 50,000. At the 6 year, my 300,000 is gone. I don't have any more money in my account. I will still get guaranteed income for life. I will still get my money from the annuity company because it's a contract that I made with them. How am I getting my money and my account is on zero? Well, there's so many companies out here. There's the way that they invest your money or use your money, the interest on your money, you're still gonna gain or receive lifetime income on that money, even though your account is at zero. And I can say that, and you can't sue me for saying that because I'm telling you the truth. All right, guaranteed income for life. One of the key benefits why sometimes we have to put people into an annuity is that health isn't a factor for qualifying. With life insurance, you have to be healthy, or if you're not healthy, if you have some health concerns, you might be paying a lot of money for the insurance policy, and that might be out of your budget. But with fixed index annuity, health isn't a factor, right? You can get this product, and I could have cancer, heart disease, whatever, severe asthma, whatever. They don't look at your health. It's other qualifying factors as far as income, savings, other factors financially that are a factor, but not your health. With annuity, the fixed index annuity, you can have one or multiple crediting strategies. So a lot of people like to say, well, zero is your hero. I didn't make any money this year. Well, you can have a fixed interest strategy. There's a lot of different strategies. So I can have 50% in the fixed interest. I can have 25% in the S&P or 25% NASDAQ or 25, as long as it makes 100%, I can have it all over and make sure that I make some money for that year. So you can have multiple strategies or you can have one crediting strategy. All right. And then the carrier has some allocations that they have that are proprietary to that carrier. Okay. And one of the best things that I love about fixed index annuities, remember I told you health isn't a factor, but they also have living benefits attached to them. All right, or wellness withdrawals. They have different names for this. So if you look back at the other videos that I did, I was talking about living benefits with AXA Daily Living. Well, AXA Daily Living is the same with a fixed index annuity. So if you cannot perform 2 of the 6 AXA Daily Living, you can have access to the principal in your policy. All right, the principal and whatever growth you have, you can have access to that money while you're alive. Like sometimes these are not 1 year, well, it's different strategies for different annuities, right? But most of the time, the insurance carrier wants you to have these contracts for 7, 10, 14 years. There are some 3-year, annuities out there, 2-year annuities. But most of the time, they want you to have them for 7, 10, 14 years. All right. So if you do come down with 2 of the 6 that you cannot perform, going to the bathroom, eating, getting up, transferring yourself from room to room, bathing, toileting or continence, that's 2 of the 6, and it has to be for 90 consecutive days. All right. Now I just want to show you guys this just to break it down a little bit more. Hopefully you can zoom in on it. I didn't really look at it when I thought I drew it big enough. Hopefully you can see it. All right. So what we're saying, principal protection. So if I have $300,000, okay, I have $300,000 in my fixed index annuity, and the same person has $300,000 in a 401k, okay? a 401k, a 403b, a thrift savings plan, something like that. Now, what happens with my $300,000 in a fixed index annuity? What they're doing is they're taking that principal, they're putting it into a general account. Okay, so that general account is filled with bonds, with safe, high grade corporate and government bonds. That's where your principal is. Okay, so that's why I'm going to explain why you can never lose any of your principal. So that's where your principal is. Now, from these bonds, these government bonds and high grade corporate bonds, they're taking the interest, not your principal, the interest, and the interest is now going into options. Options which are, going to be in the market, options that are going to be, buying this, buying that, buying the other. And if it makes gains, that interest is credited to your principal. If it doesn't, you don't lose anything because all they're using is the interest. Okay. But say for instance, so in my case with the 300K, the interest has now grown my money up to 320,000. Let's just say the market, the S&P, the 401K, NASDAQ, 401K, thrift savings plan, 403B, whatever is in the market, in the NASDAQ, in the S&P. Let's say they gained the same 320K. But let's say the market crashes, the market goes down. They go from 320K down to $310,000, right? Because they're directly invested, their money is directly invested into the market. Okay, it's directly invested into NASDAQ, it's directly invested into the S&P 500, any of these other strategies, right? Your 401k, your 403b, your thrift savings plan is invested in these things. Now, I'm not saying anything bad about a 401k or any of these other options. You just need to know what it really is and what it can do and cannot do. You can lose money in them. Okay, you can be an aggressive investor, a moderate investor, or a conservative investor with your company that's doing these investings, but it's still a possibility for you to lose money. All right, so now let's say with my fixed index annuity, it's gaining more interest in these options. Now the interest gets credited to my 320 and I go up to 340. But people that have a 401k, a 403b, thrift savings plan, things like that, they went down to 310. Now they have to build back up and they're just reaching my 320, but I'm already at 340 now. So it's a game of playing catch up. When you lose, now you have to make that up. With the fixed index annuity, you don't lose any of your principal or any of the interest accredited to your principal. So that's why this is one of the best things that I think is out there right now as far as people that are looking to make sure they have a nest egg for retirement and looking to make sure that they have guaranteed income into their retirement. This is one of the best products out there, in my opinion, to have insurance for your retirement. Hey, this is Leonard. You guys can contact me at LLG@legendarylegacygroup.com. Website is legendarylegacygroup.com, or you can call our business number at 773-458-0020. You guys have a great rest of your night. The Bears are going to be whooping on those Jive Turkey Rams come Sunday. You guys have a great rest of your weekend. Talk to you soon. All right.